The signals of a market topping out are always so clear in hindsight. You wake up with your new beautiful girlfriend at the Four Seasons with your newly bought red Ferrari, knowing that you're probably going to buy another supercar later that day. You visit Godiva for a sugary treat and Ouya for a morning croissant. Coffee's not enough, you decide that a WGT will clench your thirst. Quick stop at Sotheby's for a new piece of art as you can see your portfolio growing exponentially, hard to look away. Treat the girlfriend to Prada, Cartier and decide that the Mandarin is the most appropriate place for your next vacation. Marvel at your newly bought watch. Buy a diamond bracelet for your dog. Drive in your Lambo to think of new ways to spend the crazy portfolio gains. Another 100% this morning? What? Rolex, blue McLaren, maybe a Porsche. Time to buy some random Totoro from Lane Crawford and a Christmas tree in October. That blue McLaren was too normal, I need something that will stand out a little bit more. Let's throw in a family car. As much as we think in a bull run things are going to go up forever, that is usually where they top and drop like a brick. Bulls will tire out, the relentless green will turn to red, those crazy standard charter price targets might get hit but usually don't. That overpriced sculpture felt like a good idea on double-digit green days but not so much on double-digit red days. The market doesn't go up forever and it's important to have an exit plan to capitalize on the bear market that usually most often follows. I'm going to go through 9 different signals and indicators that help me understand when the market looks overheated and when it's looking like it's hitting a top. So if you think that this is of any use to you, please like, subscribe and leave a comment down below. This picture is of a NFT launch party where I think a lot of ketamine was involved. It also marked the top in March of this year and the cycle then went on a downturn and a chop for the next 7 months. It was extremely important to realize that some of the top signals that I'm about to go through were definitely evident at that point. So, let's get started. Number 1, trend lines. It's really easy to see that Bitcoin follows a very simple trend line. If you look at it on the weekly and the daily, you can see that it taps this trend line and it can go back sometimes months or even over a year. That can be really helpful because if it crosses through this trend line that usually acts as support as you go through the bull run, then when it crosses it usually becomes resistance, and that can usually signal a downturn or a mid-cycle bear market or potentially the start of the new bear market. So it's definitely a trend that I like to look out for, it's definitely a trend that I follow, and it just gives me a very simple idea of where the market is going. The trend is your friend until the end. Number 2, a very reliable indicator called the Relative Strength Index. This RSI indicator, when it hits 70 and it goes over that, that's an extremely clear signal that the market is getting overheated. There's a lot of buyers in the market, there's a lot of FOMO in the market, and it has historically proved that the market is now at a top. So it can sustain this for a few weeks. It's not always going to be immediately over the 70, it then drops down, but it's definitely a good indicator that shows that there is definitely a change coming at some point, because there needs to be. So when it hits 70 or gets near 70, that's when you can start to think about taking off some lifestyle chips, taking out some money and having cash on the side to potentially profit from the opportunities that come from the bear market. Another really clear signal is number 3. It is the RSI, but it's a different type of indicator. It's showing the green area, which again, if you look back at the previous cycles, when it gets into this green area, it's a signal that the market is starting to get overheated. There's a lot of buyers, there's not a lot of sellers, and that can only sustain for so long. So that's another really clear signal that maybe it's time to take off some lifestyle chips, take out some cash, and just have that ready on the side for opportunities that come in the future. Number 4, the Fibonacci retracement line. If you draw this Fibonacci retracement line using a simple tool like TradingView, you can see that when you go from the bottom of the last cycle to the top of the last cycle, you can see all of these indicators are hit. The 618, the 2618, the 3618, and at that point, when it breaks the 618, the all-time high, it usually goes on these moves that are very, very quick, very volatile, but it usually tops out at one of those levels. This could also be a useful indicator for altcoins. When you get past that all-time high, the altcoins are ignited and they usually go on past the 3618. So it could be a really good indicator that could be used for you in the future. Number 5, the total crypto market is now sitting at 2x the last crypto market. So if the last cycle went to 5 trillion, then this cycle getting to 10 trillion could be a good indicator that the cycle has delivered, it's provided exponential gains, and maybe it's time to look at taking some profit or just being a little bit more careful about adding to positions. So 2x to 3x the last cycle top in terms of the market cap, the total market cap for crypto, is a really good signal that I like to look at as a measure of where we're going and how far it's managed to outperform the last cycle. Number 6, the Bitcoin dominance chart. I love to use this chart because it gives you a clear indication of when altcoins are going to start to outperform Bitcoin. You can see that when Bitcoin dominance starts to spike up, it usually is followed by these quick retracements, and in those retracements, that's when the altcoins start to outperform. When you've got a cycle that is usually quite predictable, it's usually about 4 years, and after the halving, it usually lasts from 12 to 18 months. When you start to get alt season 12 months after the halving, that's probably a good sign that the market is getting overheated, which is where the Bitcoin dominance chart can really be a helpful tool, because you can see that if that Bitcoin dominance is going down, altcoins are going up. There's probably a time frame for you to start exiting the alts back into Bitcoin, or potentially exiting crypto and having some cash on the side. Even though for me, I'll probably never sell all of my Bitcoin, I will definitely look at potentially taking off a little bit of lifestyle chips so that I'm able to invest in potential bear markets into 2026, 2027. Number 7, the USDT dominance chart, which shows basically how much cash is in the crypto market. USDT is Tether, which is the stable coin that's on most of the blockchains, and it's the most used stable coin. So it's a great indicator of how much cash is in crypto and how much is now being invested into the different blockchains, altcoins, Bitcoin. If this market cap starts to drop, that's usually going to mean that the crypto market is going to start to increase very quickly. If this market cap starts to increase for the Tether market cap, that's going to usually mean that people are now going back into cash. Number 8, the MVRV score is approaching 7. This means that Bitcoin's market value is overvalued compared to its transaction value, showing that there's inflation in the price and there's a lot of heat in the market. Probably a good time to start to wind out. Number 9, the 200-day moving average. This is usually a floor for Bitcoin during a bull run. Bitcoin will hit this line and it will usually bounce off. If Bitcoin goes underneath this line and it starts to stay underneath this line for a duration of time, could be days or weeks, this is usually an indication that the bull market may be coming to an end. Number 10 is a bonus. It's the 4-year cycle that Bitcoin has always followed since its inception. It's this predictable pattern that 12 to 18 months after the halving, there's usually in that time a parabolic banana zone, which just means that Bitcoin grows exponentially and it outperforms all other asset classes. This may not always continue, but it's something that people who are in the crypto space take very seriously, and they plan for this. If you managed to get any value from this video, please like, subscribe, leave a comment below and hit the notification bell. Could it be relevant? I think that with the emotions in crypto being so extreme in the fear and the greed, because it's such a new asset class, it's extremely volatile, the importance of understanding what indicators you can follow to help you understand when to exit a position or just downsize a position or increase a position can be really helpful and useful. Warren Buffett says, be fearful when others are greedy, be greedy when others are fearful, so do the opposite of what most people are doing. That's how he has been so successful with Berkshire Hathaway over the last 30 to 40 years. I think that the indicators of leverage traders going extremely long, people in the crypto space ripping up their McDonald's CVs because they no longer need them, everyone's talking about which Lamborghini they're going to get, everyone's talking about retiring their parents, everyone's extremely bullish and excited. This usually indicates that there's a top in the market. It historically has been the case ever since the inception of markets in general, and this is something that Peter Lynch talks about in his book One Up on Wall Street, that usually capitulation is when everyone is so depressed and sad and everyone thinks that it's going much lower. It usually starts the uptrend and it goes higher. I would say that it's hard to know exactly what's going to happen with Bitcoin because there's going to be this perpetual bid from the ETFs, BlackRock, that have managed to surpass 30 billion in assets under management, is surpassed gold. In its first year of inception, it's already 50% more than gold in its entire history of being an ETF product. You've got Michael Saylor, who's going to potentially start to raise capital of up to 42 billion over the next 3 years, so he will consistently buy Bitcoin for his treasury, which is a publicly traded company. And if this catches on and more companies do this, there's not going to be the same traditional huge exponential uptrend with this crazy volatile bear market where Bitcoin drops 70-80%. It might not be the case going forward, but you can't know for sure. It's just important to have these indicators, know exactly which ones you want to follow and which ones you can follow on a daily. Really appreciate, again, anyone who makes it this far. If you have made it this far, leave a comment down below so I know who you are. And genuinely, I hope this helps. It's extremely important, especially over the next 6 to 8 months. The markets are going to be volatile, maybe extremely volatile in the upwards direction and also in the downwards direction. So again, if you got any value from this, like, subscribe, comment, notification bell, and I'll see you in the next one. Thank you very much.